Okay, let's give this a refresh. What are we on now? We're on like what, 27th? Alright, so bank holiday Monday, no trades obviously, bank holiday, not touching it. Yesterday, model played out absolutely perfectly. I didn't take a trade because I was busy at work, and it also occurred maybe like 1, 2 in the morning, like the original setup. There was opportunities to get in and multiple times, and I didn't do it because I was very busy at work. So let's get into it. Firstly, let me just undock this. How did I do that before? There we go. Right then. So let's take that off. As you can see here is the model playing out to perfection, pretty much. Previous daily high was here. Previous daily low was here. Yeah. Price trades below previous daily low into an area of higher time frame imbalance. What do we get from there? We get a inverse fair value gap, and this formed at 10 to 9 New York time in the evening. So that is pretty late if we think about 1:30 being 2 o'clock, 7 hours down the line. That's like 9 p.m. All right. It's a bit later than that. It's a bit later than that. But at the same point, what do we get from here? We trade down into high time frame imbalance. 1, 2, 3 candles, break a structure here. Price continues up past this, and yeah. So the initial first entry you could take being a retracement into this fair value gap caused right on the breaker structure by previous daily low. Price then does its thing. London session comes down, doesn't trade into the inverse fair value gap and continues back up. So it's failed to come lower. My thoughts were, we've got relative equal lows here coming into the London session, the New York session. Price continues up, and yeah, so I think we had a bit of news yesterday. Just double check. Sorry, my phone's going off. All right, so yesterday we had no, we didn't. Okay, but bear in mind this was post FOMC last week, so FOMC created a big move up and sort of shunned the downward move that we were looking at, for now at least. And then, we look across here, we've got all of this, an imbalance here, got PM session highs, and we've got relative equal highs up here around previous daily high. So there's a few draws on liquidity. Now, there was another opportunity to get in long here at the same point at 9:45. Here it was, anywhere between 3 o'clock and 3:25. So yeah, a bit of a bummer really, because this was a banger. Like, you look at where the stop is, it's literally right below the inverse fair value gap. Nowhere near does price come down at any point. And yeah, this would have been a nice 4.6 to 1. If you were to create a limit order, I would have put, let's say, even 2% on this. It's like 4 to 5 units. 2.1%, £145 stop, 677 profit. That would have been sweet, mate. You know what I mean? I think if we did 8, 3.4%, 233 quid stop for £1,000. Unfortunately, yeah, I didn't take it because, like I say, I was busy at work, and I kind of was looking at these here when I should have been trusting the model. But, it is what it is. It is what it is. So today, I was looking at price, and let's go to hourly here. Don't know what I just clicked there. Right, so you look at the hourly. We're already up in this fair value gap. We've already tapped it multiple times. I was short today. I didn't go short, but I was kind of bearish. But at the same time I was bullish looking at this. I was thinking we either come back off this after sweeping upwards to come down further to maybe fill in this imbalance a little bit more, but we didn't really need to. So I was a bit like, I was up in arms pretty much. I wasn't really too sure which way price was going to go. We didn't have any red folder today, and you can see manipulate down at 8:30, coming up to 9:30. On the Nasdaq, we come down a lot lower on the Nasdaq here into this inverse fair value gap. I was looking at the S&P more today. Obviously, we didn't get the model either, so that was another reason why I didn't trade. I was looking at setups, but I didn't trade because the model didn't form, and yeah, I think that's the most important thing. So if we go into the 5 minute, I was looking at this, like we did drop down here and created an imbalance. I was looking for a potential retrace up into the fair value gap, which we got. For a move down, I was targeting this low or PM session lows, but you look at this, we've got an order block here. So you drag that across, that comes up to bounce off that, and that acts as a breaker. So yeah, it's one of those. I was just sort of looking around to see if there were any setups, and I was just so uncertain. I was like, it could go either way, and my model's not formed. I'm not going to trade. So yeah, so we look at the timings here. We'll go on to the 5 minute actually. Look at the timings here. So 8:30 was this move down. I was thinking, right, manipulation down. 9:30 we push up into this, and I was thinking, right, we can either see a short move like so into this fair value gap, target, wherever that low was. However, on a 5 minute chart, this low trades into this inverse here, I think. Yeah, so it trades right into this inverse fair value gap and then comes back up. So you're looking for a target like there or down here with the stop just above the high. And I was like, you know what, okay, I'm unsure. So what I did was we wait until 10 o'clock. So it's this candle here. I was looking for a silver bullet setup to form, but you can see in the candle formation, it's just not what you would want it to be. You'd want like a breaker structure and then a fair value gap to form, so you could trade back into that and then go long off that. But it's just like, do you know what I mean, very choppy, no news. I was thinking it could just be quite a choppy day, but it's just sort of gradually traded up to take, well, I mean, we're already above the PM session highs and the London highs. We've already traded above the London highs and the London lows. So I was thinking we'd be more likely to come down here, but it is what it is. If we look at Asian session highs, I suppose that could have been a target. I don't think we sweat those. Yes, you can see that original candle doesn't quite take these over here. So yeah, the Asian high probably would have been more of a realistic target there. Speaking of which, I might actually add the Asian session onto my indicator just so I can use that as another confluence. And yeah, so from here, we get to 11 o'clock. That would be where you'd expect delivery. We're clearly above the Asian highs here. Price come up a little bit, and then 12 o'clock retracement in the lunch hour and continuation going into the PM session. So yeah, no trades for me so far this week, which is fine. I'm going away on Friday, and I don't anticipate another trade until next week at least, if I even decide to trade. But knowing the model, this was the one that formed, and yeah, we won't see that for another few days at least. So one of those, bit frustrating that I did miss this, because this would have been spot on. Got multiple points to get it in, and I just didn't take it. So Yikes, pussy, you know what I mean? But it's fine. Still up approximately 2.3% on the month, and I'd be happy to end the month with that return. So yeah, I think today it was mainly just like I was uncertain as to whether price could go up or down. I didn't know which way it was going to go, and it wasn't clear enough for me to get in. 2, Asian highs can be used as a draw on liquidity. As you can see here, the Asian high was above the London high. Price didn't quite sweep that at 8:30 or 8:15 even, and that Asian high is around here, I think, or here. So either way, it's just not happened. So one of those. It's an interesting one. What else is there? Nvidia earnings, that comes out after market close today, so that will release in a few hours, and I think I wouldn't be surprised if Nvidia beats earnings again, because it pretty much consistently beats earnings, or expectations at least. And if it does beat expectations, then we'd likely see price continue up higher, to then target all of this liquidity here, and eventually move to all-time highs. But if on the off chance that that doesn't happen, we could see, as you can spot on the S&P, we can maybe see a sweep of this high, of all-time high here, and then price come down and continue along our very much higher time frame narrative of this being the monthly target FVG. So a lot of things to consider. Ultimately, I'm happy with today. Bit bummed out about Tuesday, being that would have been a belter, and I wouldn't have had to trade for another month, especially after 600 quid to a grand profit. So yeah, it's one of those. We move and we learn every day. We review, we move, and we learn. So yeah, I will be back tomorrow with another update, and I'm just going to check, see what news there is. So tomorrow we have unemployment and GDP. So yeah, all depends. And with that being said, I will catch you then.